Hi, this is Dr. Sherry Peel Jackson, and today we're going to talk about hacks that'll save you money on your taxes when you are a real estate investor.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 502. What if you could peek behind the curtain and see exactly how the IRS views your tax return, especially as a real estate investor? Dr. Sherry Peel Jackson used to be the one reviewing them. She's a former IRS agent, CPA, and certified fraud examiner who now helps investors legally reduce taxes, grow income, and protect wealth using strategies most accountants won't mention. With over 100,000 clients helped, she brings a rare insider's perspective that can save you money and help you scale smarter. Dr. Jackson, Sherry, welcome to the show.
Thank you so much, Brian, for having me on your show.
You have a fascinating background. Tell us a little bit about yourself. I mean, both from the IRS and certified fraud examiner, and then you're also a real estate investor as well.
I've had an interesting career, and it's pivoted several times. I started out going to school for accounting, of course, and got my CPA and worked for corporate America, worked for CPA firms first, and then ended up at the IRS. That job was very interesting. I worked there 7.5 years, and I learned a lot about how our tax system works. And I like now to make sure that people are able to keep, protect, and grow what they earn.
You're also a real estate investor too. So what type of real estate do you invest in? And how is being, having worked for the IRS inform how you function as a real estate investor?
I listened to one of your other podcasts, Brian Tibbs, and he talked about the hacker. And it's like, I'm doing all of that. So I have the home that I live in has a full basement. And I'm the only one here. So I got that basement turned into a full apartment and rented that out. That's one of them. And then I have some property on the other side of town that is just sitting there waiting for it to grow. I have 3 pieces of property in Costa Rica that are 2 of them are in the process of being developed now. So that's why I'm really interested in real estate and finding private money. So that's what I do with real estate. When it comes down to taxes, you have to make sure that you understand the intricacy of the rules. There's so many. For example, when you have property that you're developing, there are certain rules that you have to follow concerning the expenses that you take to develop that property now versus when you start making income. So you have to be able to know whether you should capitalize those right now, whether you should expense them right now, because when the income comes, you don't want to pay tax on all of that, knowing that you spent thousands or maybe even millions of dollars earlier. You want to have those matched up. And I think the IRS knows that. And you just need to have a CPA that can make sure that it's done correctly.
Be more specific then when and let's talk about development since we're starting there and you're also doing some development. Like, what are the specific expenses that you can write off in the beginning? And since you're in the development phase, all you have are expenses. There's no real income. So what would you even claim as income at that point?
There's no income. I'm a retired CPA. I don't do my business tax returns. I have a CPA do my business tax returns, and she capitalizes the expenses. The only expenses that I write off is my travel. So I'm going to Costa Rica 4-5 times a year, making sure that contracts are signed, making sure the developers are in place. So the expenses for my travel are written off, but all the other ones are capitalized. And when the income starts coming in, that'll be taken care of. Also, I'm having some of the monies, because it's coming straight out of my pocket as opposed to investors, as loans. And so those loans, when they're paid back, they won't be counted as income.
Rather than raising equity at this point, you're raising debt. Then you don't have to worry about counting it as income.
I'm just starting out, so I'm just learning. I definitely want to raise capital, but that's something that's going to be happening this year and so in the future.
And just to dive into that a little deeper, if you're flying to Costa Rica and you're writing off the air travel and probably the hotels and the meals, how far can you go in writing off expenses before the IRS would say, wait a minute, some of this is just a vacation?
Everybody thinks when I go there, you take so many vacations to Costa Rica. No, I have a home there because it's cost prohibitive for me to continue to stay in hotels and Airbnb. So I did buy a home. That's not going to be my permanent home. Once I get the development done, I'll move into that and rent that one out. So that'll be more rental income. But as far as travel is concerned, that is an IRS kind of red flag. They want you to make sure that you can prove that it's business. So I'm going down there, I'm doing videos, be meeting with people, and this is all documented. The thing about the IRS is you can write off all ordinary and necessary business expenses. Internal Revenue Code Section 162 gives you that right. So what is ordinary and necessary? And let me give you an example. So there was a woman, her name is Cindy Hess, and she wrote off a breast enlargement on her tax return. And the IRS just had a good laugh and took her deduction away. So Cindy Hess got an attorney, and she fought in tax court and won the right to take her breast enlargement. Well, how did she do that? Cindy Hess, better known as Chesty Love, was a pole dancer. And for her, that was an ordinary and necessary business expense to keep up with the younger girls. So if she can do that, anybody shouldn't be afraid to write off all ordinary and necessary business expenses. Common, helpful, and appropriate is what that means. So if it's common for what you do, if it's helpful and it's appropriate, so it's appropriate for me to go down there for however long and do business. I have contracts to sign. I have bank transfers to do. I have to meet with attorneys, meet with residency attorneys. I have to meet with the builders. And this is all documented. As long as you have it documented, people shouldn't be afraid to write off all of the expenses that they have when they have their real estate. For example, if any of your constituents have property in other states, they got to go to those other states. Just document it and make sure that you have that in place for at least 3 years.
What is the basic threshold of documentation that the IRS expects to see? I mean, if you're writing off meals, travel, that kind of thing, how does it seems like the IRS could easily say, no, we don't accept that. You have to show us documentation. Well, who determines what level of documentation they're going to see and accept?
A lot of times they operate on fear, and some things that they will, because I have clients that I've represented or helped, they will say, oh, no, you can't take that. But then there are other ways around it. So first of all, the misconception that the IRS will take your debit and credit card statements as your expenses needs to stop. They will not, because they'll say, oh, you have a debit card with Staples on there. Staples is a business. It's for your business expenses as far as your office expenses. But you can buy anything from Staples. So if you don't have the receipts, they don't respect that. There are a lot of apps where you can make copies of your receipts and transfer them over into software like QuickBooks. Old school people like me, I keep my receipts. Now, people that want to keep their receipts, they need to make sure that they copy those receipts, because that paper that they use for the receipts now will make the ink disappear. And I don't know if they did that on purpose, but I guess it's cheaper. So if you have a receipt, which I've done, and leave it in the car in the sun, pretty soon you won't see that. So I make copies of my receipts, staple the original to the copy, and then put it in a folder so that even if that ink goes away on the original, it's not going to go away on the copy. But most of the younger people, they have these apps. You just be careful to back that up, because if you lose your information on your disk or your phone, then you don't have anything. So that is basically the threshold. Have your receipts. Now, if you get in trouble and have an audit, like one of my clients came to me, bless her heart, the same day she got diagnosed with MS, she came home and there was an IRS audit letter in the mail, and she called me crying, and she didn't have a receipt. She actually used the debit and credit cards, but there's a way to go back. You are able, under what's called the Cohen Rule, to go back and get your receipts. Cohen was an actor back in the 30s, and he traveled around to Broadway and LA and all that. He didn't keep his receipts. The Cohen rule says if you have income, logic dictates that you have expenses, and you're able to go back and even like on the mileage, back extrapolate back and say, okay, here's my calendar. Here's where I was all year. And then we have an easy way to do it. They didn't have that back then. Just go to Google and figure out the mileage if you drove. Go back and look in most of us have that travel a lot. We have Sky Miles and things like that. Go back and see pick up your flights. You can get your flights. What I had her do is she had a specific vendor that she was using for equipment. And sure enough, that vendor had her records because vendors are supposed to keep your records for at least 3 years. So she was able to go back and get those records from the vendor and several vendors actually. So she ended up getting a refund because whoever did her tax return didn't take all her expenses. So going back, don't be afraid to go back if you don't have it. Go, if you have pro accounts, like for example, at Home Depot, which I have an account because I have to fix up stuff here at this property and the other property. So those are things that you can do. Don't worry. If you have your receipts, you're going to be okay.
What I'm hearing you say is the IRS, they want to see receipts, and the more detail you can provide, the better. And even if you have to go back and do some forensic investigation onto the past 3 or 4 years, that really helps bolster your case.
Yes, and I have a secret for your listeners.
Yeah, I'd love to hear it.
I'm going to tell you guys the fastest audit that I ever had. There's a procedure that the IRS uses called TCMP, Taxpayer Compliance Measurement Program. That means that me, as an IRS agent, was assigned to go out and audit every number on the tax return for several businesses. Normally, when there's an audit, you're picking 2 or 3, maybe 4 areas that you look and see if the expenses are there. TCMP, you have to look at everything. So I was expected to be at this particular business for 3 days because it was a partnership actually. And I went out there and was done with that audit in 4 hours. This is what they did. For every number on the tax return, they had a manila folder and they had all of the original receipts in that manila folder. They copied all of those manila receipts for me to take with me, and they had the adding machine tape in there. For example, their advertisement, let's say that was $4,301. They had $4,301 worth of receipts in there. They had the adding machine tape up there to equal 4,301. And on the other side of the folder, they had the copies of all those receipts for me. So I went in every folder, look at the number, added it up, took my copies of the receipts with me, and moved on to the next one. And when I left them, I told them, I'm going to tell everybody about this because you don't want IRS agents in your hair. And that was the best way to get me out of your hair, have everything there. And even if you don't have everything, when I was at the IRS, the standard procedure was because you're not auditing the current year, usually the audits are years back, maybe 2 years back at most. So people lose things. So if you have 80% of your records, they'll treat it as 100%. Now, if you don't have 80%, they're going to treat it as what you have. So if you only have 50% of the receipts that you expensed, they'll give you 50%. If you have 80% of it, then they'll probably say, okay, well, we're gonna just concede and give them the whole 100%.
On the flip side of that, like what were some of the mistakes, the common errors, and just the major problems that you saw real estate investors making that got them in trouble in an audit?
The biggest thing is not keeping receipts. That was the biggest thing. And it is so hard sometimes, especially when you're rehabbing, to keep up with all that you're doing. So I would suggest that everybody go get like a pro account at Lowe's or Home Depot or wherever they go. Get an account where you have a backup, and your backup is going to be that vendor. So the receipts were the biggest thing that I saw. With real estate, I know when I started moving up and doing corporations, the things that they do they kind of skate around sometimes. Like, for example, it's 1031 exchange. There are rules. And if you don't follow the rules, then some of that income is going to be reported. So, one of the things I had to look at is if they were in the correct period of time, did they get any of the money? If they did get some of the money out of the sale, did they report it? Those types of things. So being very careful about following the specific real estate rules that you're using.
When it comes to 1031 exchanges, were there common perceptions or misconceptions that real estate investors had that got them in trouble when you looked at their 1031 exchange?
If they weren't using a professional, yes. If they were trying to do this based on what they read, there were sometimes issues. For example, you have a certain amount of time that you have to get the other property. You can't wait 2 years and say this is a 1031 exchange. So I have clients that sold property and they did a sale as opposed to, using real estate agents and whatnot. They did a private sale. It worked out very well because I was coaching them along. They sold the property for $750,000. They put a great contract together so that this family that bought, it was a large ranch. The family that bought it was paying them like $48,000 a month. And, they had stipulations in there about that. And if they were late, and they did a large down payment and then they paid on time. So then my clients didn't have to take a big hit on the taxes. It kind of flowed over time.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com.
If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. You said get a professional, and I'm assuming you mean have a third-party intermediary to handle the 1031 transaction? Because I certainly answered a lot of questions from investors who've sold a property and they're like, well, I'm thinking I'll do a 1031 exchange. And I have to say, well, yeah, it's too late. You already sold the property. You didn't have an intermediary. That ship has sailed.
I've run into that because people find out about it after the fact, or they try to make it look like it was done. An attorney that is familiar with 1031 exchange or a realtor that is, like yourself, that's going to advise them, hey, make sure that before you sell a property and you're thinking about doing a 1031 exchange, you get everything in place. You understand it and get some coaching on that so that the property will qualify for a 1031 exchange.
What other tips and tricks do you have for real estate investors that we should keep in mind as we do our business that, will not only keep us out of trouble with the IRS, but help save us money on our taxes?
This is for everybody. Yes, make sure that you have somebody that knows what they're doing to do your tax return. The IRS goes after the low-hanging fruit. And the low-hanging fruit is when you do your own tax return. They actually do look at who prepared it. They don't want to run up against a crackerjack CPA because they'll get slammed down. They don't want to run up against a tax attorney. But if they see that mom and pop, your real estate company, does its own tax return, you're fair game because they figure that you don't really know what you're doing. Also, tax returns that are done by companies like H&R Block. I had several of them, and over the years, at least 90% of them had adjustments because those people get trained like in September and then they sick them on you in January and they really don't know the ins and outs. So if, as you get into your real estate development and business, make sure that somebody that is a professional as opposed to going to H&R Block does your tax return. Those are some of the things. A lot of realtors and other people don't know some of the, I want to say, credits or perks. And I don't know, I'm going to just name this one. For example, The Augusta Rule. Are you familiar with the Augusta Rule?
I'm not. No. Do I have to be in Augusta to take advantage of that?
So in Augusta, Georgia, there's this golf tournament, and this rule is named after that. So there are golf teams that fly in from all over the world to play in this tournament. And there are $1 million plus mansions around the golf course. So these people that own these mansions, they wanted to rent their homes out to the golf teams, but they didn't want to incur these high tax bills for that. So they had friends in Congress and said, hey, we don't want to pay tax when these people come every year. So what can we do? So their friends in Congress made the Augusta Rule. For up to 14 days a year, you can rent out your personal home and have no tax consequences. So I went online to look at the amount of rent that they're receiving, $10,000 to $14,000 a day. So you're gonna get, if you rent your home out to a whole golf team or whoever for the 14 days and you're charging them $10,000, you have $140,000 of income that came in, and it's not taxable. Now, those of us that aren't on the golf course can do that also. I've done that. We had the 1996 Olympics here in Atlanta, and I rented my home out to a reporter from Copenhagen, Denmark. And the money that I received from that paid for my children's my children's school tuition at that time. So these are rules that are out there that a lot of people don't know about. And since you all are dealing with a lot of real estate, then not only the ones that you know, but the ones that they know that are dealing with real estate. Hey, that's a good income right there.
Let me repeat what you just said and make sure I'm clear, because I think that people listening to this might realize, hey, they own a home or a property that's in an area where maybe once or twice a year there's some huge event and people will pay large amounts of money to stay at their place. And if it's under 14 days, they don't have to pay any taxes on that income.
That is correct.
I love that. Now I'm thinking, what can I rent my house out for? What else you got for us? It sounds like you're just full of ideas here.
For corporations, if you have a corporation and you have a home that you own, and this is similar but not the same, in light of the Augusta Rule, let's say there's not an event in your area, and there's you live out and there's nobody going to rent your place. Your corporation can rent your home for 14 days. The corporation will pay you as the homeowner, and you don't have to pay tax on that. So I just got a client in March. I saved him $22,400 automatically because we just had his corporation and his self write a lease. And once a month, they're going to have a meeting. It needs to be 8 hours. And in this case, it needs to match the rent in the area. So if the rental in your area or the hotels in your area, meeting rooms are renting out for $200 an hour, you can't charge $1,000 an hour. You want to be around that area. So he lives in kind of a high income area. And so we figured out what the hourly rate was for 8 hours a day. And his corporation will be using that for their board meetings 12 times each month, once a month, and then 2 special meetings. So he's going to get $22,400 in his pocket from his corporation, which is thriving, and he won't have to pay tax on that.
And his corporation has a $22,000 expense.
Exactly.
But it has to be documented and it has to be authentic, right? I mean, you can't just
put together a contract, and he will actually receive the funds. And everything that you do that the IRS has rules for, just document it. The tax code is written for businesses. We learned that back in 2016, when Donald Trump and Hillary Clinton were debating, and Hillary Clinton said Donald Trump doesn't pay his taxes, and everybody said, everybody sucked the air out of the room. And I don't have TV, so people were calling me, did you hear? And I looked at the video on YouTube, and he said, I'm a smart man. Well, he's a smart man. I mean, he knows or has people that know how to operate the tax code for his benefit. And that's what we need to do. We need to get people in place that know how to operate the tax code for our benefit. So corporations and businesses can thrive if they just know these little rules about deductions. I call it deducting, writing off everything but the kitchen sink, your mileage. When I go to the grocery store, if I buy some paper or some pens, that's a business trip. When I go to the bank, that's a business trip. My PO box, that's a business trip. When I go across town, if I'm seeing a client, all this is business trips. When I fly to Florida and take my granddaughter to Universal Studios and have a couple of meetings with clients and have a seminar, that's a partial business expense. That hotel room, as long as it's a regular hotel room, is deductible, because if I'm in there, just because she's in there doesn't mean anything. Now, if you're going to bring your whole family and get a suite, that's a different thing, because you could have stayed in a hotel room. So you have to write off the difference between a hotel room and a suite. So my brain is just wired to say everything is deductible until it's not. And so that's what I teach my clients, because we want to make sure that we keep what we earn.
Anything else? Any other like low-hanging fruit or techniques that we should know before we wrap up this conversation?
There are a lot of them out there, but the main thing is making sure that you document everything, because and get someone who knows how to research. I don't know everything, but I'm an excellent researcher. So I will research something to make sure that you can write it off. I had a client call me from Costa Rica yesterday, wanting to set up a 501c3 here in the States, but he wants his same board of directors that he has in Costa Rica. Just researching. I found out that they don't have to be U.S. citizens to be the board of directors of a 501c3 here. So researching is something that, leave it up to your advisor, but if you don't have an advisor, research yourself so that you won't get into any trouble with the IRS.
Tell our listeners more about like what you do and services you offer, because I know you're raising money for some projects that you're doing in Costa Rica, but you also have clients who you advise on IRS matters and tax matters. Differentiate what you have to offer and how people can get a hold of you and what they would get a hold of you for.
What I do for people, usually the people that I deal with concerning the IRS, they've gotten an audit letter or they just haven't filed taxes in years. And so we get their information for all those years. And that's the hardest one right there. It could be, I had one earlier this year that hadn't filed since 2015. So getting all that documentation together and getting those in so that that person wouldn't be under stress anymore. And if someone's being audited, I love to do that, because I love to stick it to the IRS. One of my books, my flagship book, is called How to Stick It to the IRS, Confessions from a Former Insider. But the main thing that I do is actually help people start and grow home-based businesses. This country was built on home-based businesses. People started businesses, and that's the backbone of this country. And we don't want that to disappear. So even if you have a job, like most of my clients have a 9-to-5 job, instead of coming home and turning on the electronic income reducer, which I call the television, or the electronic intellect reducer, or playing video games, they take some time, decompress, spend some time with their family, and then they spend a couple of hours working on their home-based business. So we figure out what's best for them, what's a good fit based on their job, based on their temperament, based on their skills. We find a business, we set it up properly. A lot of people don't understand that just because you live in a state like Georgia, you don't have to incorporate there. I only have one business out of my 5 businesses that have a footprint in Georgia. And there are different reasons for setting up your companies in different states. Delaware, if you want to grow something and then sell it. Wyoming, if you want anonymity. So these are things that I teach them. So once we get the business set up and then, I have help with marketing, because that's not my strong point. But then we get the business growing, and they have that income that they have. If they lose their jobs, because pink slips are flying everywhere, then they have something to rely on until they find another job, or some of them want to crank up and do that full time. So my love and joy is to help people start businesses. In real estate, I am just selling part of the properties. We're building what I call Middle of Paradise Beach, which is near the beach. That's a master plan shipping container community. And 3 miles down the road, we have Middle of Paradise Hills, which is up in the hills with a gorgeous ocean view. And it's on the Caribbean coast of Costa Rica. Most of the development is on the West Coast, but we're over in the jungle on the East Coast. We just got our first McDonald's in 2019. So it's a joy to be able to do something like that. I would, I'm 62. I want to retire soon and have a place to go where I can just sit and watch the ocean. I won't starve to death if there's trouble in the country. I mean, there are no missiles pointed at Costa Rica. You won't freeze to death there. It's just beautiful. I want peace and freedom. So that's what I'm working towards with that. Yeah. So, I help people do all of these things.
And how would people get a hold of you then?
They can get in touch with me at connect@sherrypeeljackson.com. My website is sherrypeeljackson.com.
Sherry, what's your favorite hack or app?
It's called ScreenFlow. And you can create videos. And me as one person, and I have a few contractors, but I don't have any full-time help. So if I want to put out a video really quickly, I can use ScreenFlow. I can record into my iPhone the verbiage for it, put that in ScreenFlow, and it gives me pictures and videos. And so because my YouTube channel, and it makes wonderful videos. It makes informative videos, entertaining videos, and I just love ScreenFlow.
Well, this has been a fantastic conversation. And, I want to just repeat something you said, which is, don't do your own taxes. If you're a real estate investor and you own property, do not do your own taxes. I don't care if you're a CPA or not. Have someone else do it for you. And bookkeeping is so important too. You've illustrated one of the great reasons why when it comes to an audit, you want to have that trail, and having a good bookkeeper in place can help you with that. And I was thinking about that as you were talking, and it's just so clear that, good bookkeeping, have someone else, have a professional do your taxes, work with professionals. Don't try to do it yourself. And you've offered so much great advice. And I know that we have some listeners here who have had light bulb moments, and hopefully this will help save them thousands, if not hundreds of thousands of dollars in the future. So thank you so much for having this conversation with us today.
Thank you so much, Brian. I loved it.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's HIGinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.